Fire can cook your food. Fire can burn your house. Electricity can power a hospital. Electricity can take a life. Neither fire nor electricity is good or bad. The difference lies in how they are used. Debt follows exactly the same law. Imagine walking into a blacksmith's workshop. The sound of steel striking steel echoes through the room. On one side, a sharp sword is being forged. On the other, a sturdy farming plow is taking shape. Both are made from the same metal. Both come from the same fire. Yet one is designed to destroy. The other, to create. Debt works exactly the same way. It is one financial tool. But depending on how you use it, it can either build your future or quietly destroy it. Welcome to Hypermedia University, where ideas become understanding. Understanding becomes action, and action becomes transformation. Today's lesson from Invest Life System isn't about avoiding debt, nor is it about encouraging debt. It's about learning the wisdom to know the difference. Because history shows us something remarkable. Some of the world's greatest businesses were built using borrowed money. And some of the world's greatest financial tragedies were also created using borrowed money. The tool was the same. The decisions were different. If you want to master money, you must first learn to master debt. Stay with this financial freedom blueprint, because today's lesson could save you years of financial stress, or help you build opportunities that would otherwise remain impossible. Nearly 5 years had passed since Rahul began his financial transformation. He now had investments, an emergency fund, insurance, better financial habits. One evening, he excitedly called Arjun. "I've found my dream car. The bank has already approved the loan." Arjun smiled. "Wonderful." Then, as always, he asked one unexpected question. "Will that loan make you richer? Or simply make you feel richer?" Rahul laughed. "I've never thought about it that way." "Most people don't," Arjun replied. "That's why debt deserves respect." The next morning, Arjun invited Rahul to an old village blacksmith. The workshop was filled with sparks. Molten metal glowed bright orange. The blacksmith held up 2 finished tools, a sword and a plow. Arjun asked Rahul, "Which one is dangerous?" Rahul pointed to the sword. The blacksmith smiled. "No, the hand holding it determines that." Then he lifted the plow. "This can feed a village." He lifted the sword again. "This can destroy one." The metal is innocent. The decision isn't. Rahul stood silently. For the first time, he realized debt wasn't the enemy. Misuse was. In corporate boardrooms, executives often discuss leverage. It sounds sophisticated, but here's what it means. Using borrowed resources to create greater value. Simple English. Borrow only when the money helps create something bigger than the cost of borrowing. That's why companies borrow to build factories, expand operations, develop technology, acquire businesses. Not because debt is attractive, but because productive debt can multiply future value. Rahul asked quietly, "So, how do I know whether my debt is helping me or hurting me?" Arjun smiled. "Let's ask a better question. When you borrow money, does that money begin working for you? Or do you spend the next 5 years working for it?" Rahul looked down. The answer suddenly became obvious. Rahul looked at the glowing steel inside the furnace. The blacksmith carefully shaped it with every strike of the hammer. Nothing about the metal determined its future. Everything depended on the craftsman. Arjun looked at Rahul. Money works the same way. Debt doesn't decide your future. You do. There is an old corporate saying, Leverage is a powerful servant, but a dangerous master. Boardroom meaning. Borrowed money should remain under your control. Simple English. The day your loan starts controlling your decisions, it has stopped helping you. The blacksmith placed 4 tools on the workbench: a sword, a plow, a hammer, a shield. He smiled. Each tool has a purpose. The mistake isn't using a tool. The mistake is using the wrong tool for the wrong job. Debt follows exactly the same principle. A loan for education that increases your earning potential can become an investment. A business loan that generates more income than its cost can become productive. A home loan that provides long-term stability may be a thoughtful life decision. But borrowing to fund a lifestyle you cannot afford, luxury purchases, impulse shopping, expensive gadgets that lose value quickly, high-interest credit card debt carried month after month. Those decisions quietly forge swords instead of plows. The money looks the same. The future does not. Rahul thought about the car loan again. I really do want that car. Arjun nodded. There's nothing wrong with wanting it. The real question isn't, do you deserve it? The real question is, will it strengthen your financial future? Or weaken it? That one question changed the conversation. Because financial maturity isn't about denying yourself everything. It's about understanding the long-term cost of today's decisions. Imagine 2 entrepreneurs. Both borrow rupee 20 lakh. The first builds a small manufacturing unit, creates jobs, generates revenue, repays the loan from business profits. The second spends the same amount on luxury consumption. 5 years later, the loan is gone. But so is the money. The first entrepreneur owns a business. The second owns memories. Again, the debt wasn't different. The decisions were. There is another expression often heard in boardrooms. Cash flow repays debt, not intentions. Simple English. Never borrow based on hope. Borrow based on your proven ability to repay without destroying your financial stability. Optimism is valuable, but repayment requires planning. Rahul asked, so how should I evaluate every loan? Arjun picked up a piece of charcoal and drew 4 questions on a wooden board. Question 1. Will this loan help create future income? Or only future expenses? Question 2. If my income drops for 6 months, can I still comfortably repay it? Question 3. Will this purchase increase in value or decrease in value? Question 4. 10 years from today, will I be grateful that I borrowed this money? Arjun smiled. If a loan cannot survive those 4 questions, it probably doesn't deserve your signature. Rahul looked at the board. This is simpler than I expected. Good financial decisions usually are. Then Arjun picked up the plow once more. Do you know why farmers value this more than a sword? Rahul shook his head. Because every season, the plow creates another harvest. Productive debt should behave like the plow. It should create something that continues producing value long after the loan has been repaid. That's the real objective. Not borrowing. Creating. Now imagine your own financial life. Every loan you've taken. Every EMI. Every monthly payment. Ask yourself, is this forging another sword? Or another plow? Don't judge yourself. Simply understand your direction. Awareness is the first step toward better financial leadership. If today's lesson challenged the way you've always viewed debt, take one practical action tonight. Write down every loan you currently have. Next to each one, write one word: productive or consumptive. Then ask yourself, What is my plan to reduce the loans that don't build my future? Financial freedom isn't built by pretending debt doesn't exist. It's built by understanding it, managing it, and using it wisely. As Rahul and Arjun prepared to leave the workshop, the blacksmith handed Rahul the small iron plow. Rahul smiled. I can't take this. The old blacksmith laughed. I'm not giving you a tool. I'm giving you a reminder. Every financial decision shapes something. Make sure you're building more than you're destroying. Rahul held the small plow in his hand. It wasn't expensive. It wasn't valuable because of the metal. It was valuable because of the lesson. Outside, the evening sun painted the village in shades of gold. Rahul looked at Arjun. I understand now. Arjun smiled. What? Debt isn't my enemy. Careless decisions are. Arjun nodded. And wise decisions can transform the very same debt into opportunity. They walked quietly toward the road. Behind them, the blacksmith's hammer continued striking steel, one careful blow at a time. Just like wealth itself, strong financial lives aren't built in one dramatic moment. They're forged, patiently, deliberately, one wise decision at a time. In our next episode, financial goals that actually work, turning dreams into measurable plans. You'll discover why most financial goals fail, and how to build a personal financial roadmap that guides every rupee with purpose. Remember, debt is a tool. Judgment is the craftsman. Discipline is the hammer. Time is the forge. And character determines what you ultimately build. This is Invest Life System. Society, Wealth, Business, Career, Entrepreneurship. By Annika Siri. Until our next lesson, don't fear debt. Master it. And let every financial decision forge a stronger future.